Hey everyone, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please be sure to follow and leave a 5-star rating. Folks, the battle between the banks and the crypto industry is heating up. The king of the banksters, Jamie Dimon, CEO of Jpmorgan, he was interviewed on Fox Business, and boy, was he angry. And he said he's willing to kill the Clarity Act and obviously stop as much progress as possible with crypto legislation because he's still pushing the agenda of stablecoin yield should only be controlled by the banks, right? He doesn't want crypto native firms to offer you a higher yield. And we know it's competition. He's trying to kill the competition because these banksters want to continue to get their big fat bonuses while they only give you the breadcrumbs of 0.01%. That is what is at stake here. Now, I also believe Jamie Dimon and the banksters would love to stall the Clarity Act so that they can catch up. We see that all the banks are launching crypto investment products. They're integrating stable coins. They're working on tokenized deposits. They're doing tokenization as well, but they're behind the curve. Native crypto firms and early adopters are way ahead. So they would love to slow this down and not have full clarity out there so that they can catch up, maybe go out and acquire some companies, right? JP Morgan recently said that they're looking to do some acquisitions. Don't be surprised if they acquire crypto companies. So let me play the clip of what he had to say. He was really angry. He said Brian Armstrong is full of shit and much more. Here we go.
So, it's complicated, and the government needs to do it thoughtfully. If they don't do it thoughtfully, it'll be a huge problem.
So are you happy with the way the Clarity Act is turning out?
No, because it allows them to effectively pay interest on deposits, stable coins or something like that, without the protection that they should have. And it doesn't do anything for AML BSA. It has almost no legal protections. So no, the banks will not accept it that way. And the ABA, the small banks, the credit unions, it's not just the big guys. I'm not worried about stablecoin, but if it happened, I'm telling you, I would have nothing to do with it, and it would eventually blow up on its own. Okay, but that's my personal thing. But I do understand the concern of all the other banks. So,
well, the markup is coming. I mean, what are you going to do about it?
It is. We'll fight it. If we lose, we lose, and we'll live.
Yeah. Okay.
But it will be fought. This will not be. No one's going to bow down to this guy, okay, or that company. And he's the only one.
Yeah.
And he's spending hundreds of millions of dollars in Washington this thing.
Okay? He said he's representing the whole industry.
He's full of shit.
Well, we're going to watch that one.
Yeah.
Wow. Well, I mean, this is turning into a big fight between the whole, each industry. And you're talking about blockchain and getting blockchain out.
But we do blockchain.
You've been doing that for a long time.
We have Connexus. We have Jpmorgan. We're going to do it. I think it's a legitimate technology. I think stablecoin can be a legitimate payment system.
So notice the fear and the anger, right? That means crypto is winning. Notice he said, we're going to use blockchain. We're going to build with it. And the Clarity Act is a decent bill or a good bill. I'm not saying a perfect bill, but a good bill if Jamie's angry, right? Read between the lines. But folks, this is the guy right here who's been giving Elizabeth Warren the marching orders since the Gensler days, right? He and the rest of the banksters, they called up Elizabeth Warren and, sent some checks and whatever it may be. And they weaponized Elizabeth Warren and Gary Gensler. And that's why you had all those unlawful attacks. And obviously Gary Gensler's been fired, but Elizabeth Warren's still there and she's still doing her same old dog and pony show, trying to go after crypto with a lot of FUD, a lot of hyperbole and much more. And you notice there's a lot of similar talking points that Jamie and Elizabeth have. And remember, there was a hearing, I believe at the beginning of 2024, where the two of them collaborated and they started bashing crypto. And I've been saying for the past couple of years, they showed their cards that they were working together. And Elizabeth Warren's farce of saying, I'm anti-establishment, I'm anti-bank. It's a lie. She works with these banksters. So clearly, Jamie is not happy, but this worries me for the Clarity Act because it looks like he's ready to fight based on his statements. And we know the banking lobby is very strong. I think they're going to be approaching a lot of the senators. The Clarity Act is currently in the Senate, and they're going to try to get those senators to not vote. So we have a battle on our hands here, folks. And President Trump just yesterday came out in a statement saying we must get it done. So could he influence, a lot of the senators, especially on the Republican side, to, still vote and not take the banking lobby money? we'll have to wait and see. It's in a midterm election year. So we know how politics works, guys. A lot of money here. And even Jamie highlighted that Brian Armstrong and Coinbase have been spending hundreds of millions of dollars in DC, but the banks have a lot of money, so they can combat that. So we'll have to wait and see, folks. Time is running out. And the bill did make it through the markup phase, but Jamie looks upset, and you can imagine he's going to pull out all the stops. These guys want to keep their bonuses. They don't want to give you any type of high yield. They want to continue to give you 0.01% while they pocket the majority of the money, right? They park the money at the Fed. They get up to about 4%. They give you 0.01%, and they get hundreds of millions of dollars in bonuses every year. So that's certainly a big chunk of why they're fighting. But I think also they want to slow this thing down so they can catch up. But Jamie's not happy, folks. And look, a lot of different folks weighed in, and I wanted to highlight a video. Many of you are familiar with this video from Tim Draper in 2018 when he spoke to Gary Gensler about what the banks would do. And it was so spot on and foreshadowing of what's to come. It's playing out to a T. So let me play it here as a reminder.
You mentioned Jamie Dimon, so let's bring it back to Jamie and Jpmorgan. What do you think is going to be the thing that they will have to change the most or lose market share and somebody else is going to do better, faster, serve their clients better than Jpmorgan or Goldman Sachs can?
You can just hear the bankers panicking right now.
But what
just
what
feel
line,
the panic in their voices.
What's the line
but here's
of business that is most
well. Here's what always happens. The first thing that happens is they try to go, oh, it's nothing. And they did that. I mean, that's with every new industry, every new technology comes along, the powers that be, the incumbents, the status quo, all say, it's nothing. Don't ignore the man behind the curtain. This is nothing. And then all of a sudden it's too big to get in there. They're going, oh my God, I got to face this thing. And then they all line up and they wrap their arms together and they say, we're not letting this happen. And then it keeps going. And then they say, okay, well, let's sue them. Or let's go get the government.
There's another thing they do. They adopt the technology. I think.
No, that's at the end.
They will adopt this technology.
No, this is the last thing they do. No,
yeah, it's like
it's after. It's after. Right. It's after the press planting. They plant the press stories. They put out lawsuits. They create as much of a fuss as possible. They try to get their government friends involved. And then they go, oh God, this thing's happening. And then they go, okay, what are we going to do? How do we get it? So then they either make or buy, as all great companies do. They go, am I going to make this or am I going to buy it? Am I going to make an exchange, or am I going to make a new kind of wallet? Am I going to bring it in so my clients can use this?
Amazing, right? It was like Tim Draper was so prophetic when he said this, and even Jpmorgan was mentioned, even Gary Gensler. This was before he was at the SEC and became weaponized. So he became the tool for the banksters. So the irony of that, right? He's asking Tim Draper is telling him what's going to happen, and then Gary played a role in that. It's incredible, guys, what took place. But again, it's not so much that Gary Gensler was anti-crypto. He was teaching it at MIT. He was positive about it, but all of a sudden he goes to the SEC and he changes. He's anti-crypto. And he's trying to shut everything down. Everything's a security and all that, right? No rulemaking, no guidance, because the call was made by Jamie Dimon and the banksters to Elizabeth Warren and him. Now, here's what Mike Novogratz had to say. He's, of course, a billionaire CEO of Galaxy Digital. He said, since when do banks get to decide on legislation? The way I understand basic government from the 10th grade is that our elected representatives write and pass laws. It's time for Washington to do the right thing. They have heard all sides for 18 months, pass the bill. That is good for our country, period. You look, Mike, that's how it should be. But money talks, man. Again, if you don't understand, you don't understand what he's saying from a principle standpoint, but money talks. So this is where crypto got to open up the coffers here. And, look, this is the game. I hate it, but it is what it is. And let's see how it plays out. I love this meme the folks that stand with crypto shared. It's the Drake meme, where he's saying no to something and yes or something with his hand signal. So here it shows Jamie Dimon's face, and he's saying no to the 2026 Clarity Act, but he's saying yes to the 2009 $245 billion bank bailout. So these guys who get tons of bailout from the U.S. government, paid for by the taxpayers, they don't want to give you higher interest. They just want to keep collecting their bonuses. And, it's funny, Senator Bernie Moreno, who's pro-crypto, he retweeted news of Jpmorgan filing to launch a tokenized treasury money market fund designed to be Genius Act compliant. So, just highlighting the irony, he says, meanwhile, ... right, to Jamie's statements. But again, they don't want to pay you the stablecoin yield, and they want to slow this down. They want to catch up. Clearly, they're building with the technology. Now, let's move ahead. This is some interesting news. Treasury Secretary Scott Bessent says the U.S. government seized $1 billion of Iran's crypto. This is interesting. Here's a quote. Just outright grab the wallet. Some of them may be typing it right now and might not realize their wallet had been grabbed. This is fascinating. Let me play the clip for you.
Here, they have at it. So we've frozen Iranian bank accounts
after they started getting bombed by Iran.
Yes, but it was a big strategic
mistake
failure on the financial side.
And you jumped right in.
And we jumped right in, and they've been very good partners. I believe that we have seized about $1 billion of their crypto. And
just outright seized it.
Just outright grab the wallets. Some of them may be like typing in right now and realize they might not realize that their wallet had been grabbed. And we are working with our allies all over Europe to grab villas and houses and properties. And this is money that's stolen from the Iranian people.
But you've frozen the offshore accounts. I mean, people may not understand that the Revolutionary Guard, they own so many of the businesses. They've been stealing money from the Iranian people.
So obviously we don't have all the details, but we know in the Strait of Hormuz and that situation that's happening, Iran has been collecting Bitcoin for payments for ships and so for people to get through. So did the U.S. seize that? How did they seize it? Did they seize it from a custodian because the Iranian folks were not using private keys? It's possible, but could this then go into the Bitcoin reserve digital asset stockpile? TBD, we're going to have to wait and get more details, but this is the first I'm hearing that they took Iran's crypto, which is pretty crazy. There was even reports, I remember when the whole Venezuela situation happened, that the U.S. seized the Venezuela's crypto, but we haven't heard of any other details there. So very interesting if they were able to do this. And I'm sure it's going to go into the Bitcoin reserve and the digital stockpile. Folks, quick word from our sponsor.
This episode is brought to you by BitGo, the trusted infrastructure behind the digital asset economy. If you're serious about crypto, whether you're an investor, institution, or building in this space, you already know security, compliance, and execution are everything. And that's exactly what BitGo delivers. With over a decade of experience and 5,500 plus institutional clients across 100 plus countries, BitGo provides a full suite of services, including qualified custody, trading, staking, financing, and stablecoin infrastructure, all in one platform. Let's break it down. Want to launch crypto services fast? BitGo's Crypto as a Service lets banks, fintechs, and platforms go live in as little as a couple of months without dealing with complex licensing or infrastructure. If you're looking to launch a stablecoin, BitGo offers a complete stablecoin as a service platform, from reserves and smart contracts to compliance, built to align with the new U.S. regulatory framework that is the Genius Act. Want to earn rewards on your crypto? BitGo runs one of the largest institutional staking platforms with tens of billions staked across 50 plus networks, all while your assets stay securely in qualified custody. Need deep liquidity and execution? Their trading platform aggregates liquidity across 30 plus venues, giving you better pricing and the ability to trade directly from custody. No pre-funding required for approved clients. And if you need capital, BitGo offers crypto-backed financing, so you can unlock liquidity without selling your assets. So here's the bottom line. BitGo is one of the first federally chartered digital asset infrastructure companies offering regulated, insured custody and a platform built for institutions, but accessible to forward-thinking players across the space. So whether you're scaling a fintech, managing a fund, or building the future of finance, BitGo gives you all the tools that you need to do this securely, compliantly, and at scale. So learn more at bitgo.com and see why the biggest players in crypto trust BitGo.
Okay, moving ahead, Paxos wins SEC approval to clear U.S. stocks on blockchain. Big win for Paxos. I've had Charles Cascarilla from Paxos on, about 2 to 3 times over the years. Paxos is doing amazing work. For example, they are the ones who are issuing PayPal stablecoin and managing that. So they're a very big firm in the stablecoin industry. So Paxos Securities Settlement Company, LLC, has received full registration to provide clearing and settlement services by the U.S. SEC. The approval clears a bottleneck for Paxos' goals for institutional tokenization of real-world assets. With blockchain as the clearing rail, PSSC, which is the Paxos Security Settlement Company, can settle eligible securities on a same day or nearly instantly, eliminating the traditional settlement window and freeing up locked capital for institutional participants. So the SEC continues to provide approval and guidance here, and all roads leading to the token economy. Blockchain rails powering capital markets, economies, and governments. And on the CFTC side, a major announcement today from the CFTC and Chair Mike Seelig. So he tweeted out, "In my first public remarks as CFTC chairman, I made clear that the agency would use the tools at its disposal to onshore crypto asset perpetuals." Today, the CFTC delivered on that commitment. This morning, the CFTC took historic action to permit the listing of a true Bitcoin perpetual contract by a CFTC registered exchange, charting a path for one of the most liquid segments of the crypto asset markets to exist within the U.S. regulatory framework. This is great because these things existed outside the U.S. and people couldn't, get access to perpetuals and all types of derivatives and much more. So that would be unfair for here in people in the United States. Obviously, it should be well regulated and make sure avoid scammers and people who are doing bad things. But this is a big win. And obviously, Coinbase is a big beneficiary of this. Brian Armstrong, CEO of Coinbase, tweeted out, "Big day for our US-based traders and for Coinbase. Until now, US users have been locked out of approximately 80% of global crypto markets, perpetual futures, and options, but not anymore. Coinbase is the first and only regulated platform able to connect US users to global crypto options and perpetual futures, including derivatives options, with greater than $31 billion in open interest." He says, "Thanks to Chairman Seelig and the CFTC for making this possible." So this is huge, guys. And obviously the CFTC will continue to approve for other firms, but we're finally getting the infrastructure and all the bells and whistles that existed outside the U.S. Finally coming in onshore. Final news item here. Texas announces the creation of the Texas Strategic Bitcoin Reserve Advisory Committee. Texas is now looking for a qualified firm to custody their Bitcoin for when they buy more. So many of these states have already started buying Bitcoin via ETFs. So it looks like they may want to get the assets directly and have that custodied with a proper custodian. So it's happening on the state level. Obviously, on the federal level, it's happening as well. Many of you may caught my interview with Dennis Porter of the Satoshi Action Fund, where we talked about the new Bitcoin Reserve Bill. Obviously, that supports Bitcoin, but also the digital asset stockpiles. So this is all bullish, guys. This is all bullish. Obviously, we got to be patient. It doesn't happen overnight. I am looking at this from the macro standpoint, and I've been saying we get the Clarity Act passed. We have all these on-ramps set up. It kicks off the super cycle. Crypto will continue to grow. The prices of these assets will continue to grow, but you got to have that long-term view. Folks, that's the news. Let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button. Subscribe if you haven't as yet. Be sure to support the podcast by subscribing to my free email newsletter. It's 100% free. Check out my book on Amazon. Grab a copy. It's available in paperback and digital. And check out my course at mycryptocourse.com. Right now, we got a huge sale going on. Use the code BEAR, B-E-A-R, at checkout to get 50% off the price. So check it out. Go to mycryptocourse.com. All the links will be in the description. Folks, thank you so much for tuning in. I appreciate you all, and I'll talk to you all later.